Hey guys, it's Thursday, May the 30th. Sorry I've been away. That's one of the advantages of whenever you're trading from home and you do this full time. I'm in the new house now. Got some things squared away here. Hopefully we won't have any more time off, but that's one of the advantages. You can kind of come and go as you please. Wake up one morning, decide to go somewhere and go somewhere. It's a good feeling. So back to trading. Hope everybody's doing good. Had a good week. Of course, I won't have a video tomorrow because it's Friday and I don't trade on Fridays. But I do look to take trades off on Friday, and then I look at it late Friday afternoon to see if there's a setup. Of course, I do that on Sunday too, but there won't be a video tomorrow, but there will be on Monday. So let's go through these. Thank you for the new subscribers. I had a couple even while I was out, which is kind of surprising. But they were had gone back and looked at all the past videos, and apparently I was good enough to be able to help them, which I hope that's the case. We're going to start out with the pound dollar. It is been in a sale from over here on 28th. Which was Tuesday, I believe. Yes. So there's not anything to do on this yet on the pound dollar. The Aussie dollar is in a buy, but if you didn't get in right here, you missed it. Now you're waiting on a pullback back down in here, and that's what I'm waiting on. If it pulls back down into here, let's see. Yeah, somewhere right in here, then I'll be long on the Aussie dollar. But nothing to do there right now. Remember, this is for trading education purposes only. Trade at your own risk. You can lose some or even all your money, blow your accounts, which a lot of people do. So do your own research and just do not follow anybody blindly, and that includes me. So, nothing to do on the Aussie dollar yet. The pound CAD, it's just kind of gone sideways. See, there's resistance here. We're back down into here. This is back from over on Tuesday as well, so it's not done anything. Nothing to do on it yet. We're going to squeeze it and see. Yeah, see, it's in a sale, but you had one opportunity, two opportunities, three opportunities, and it's just not really gone anywhere. Plus, it's at yearly resistance. That orange line right there, if it's orange on y'all's, I hope it is, that goes all the way across the screen, that is resistance. See how we closed above it a little bit? Closed below it, rejection, closed above it barely, but it's come back down. It's having a hard time right there at the yearly pivot. So if you wanted to do a sell, the high of that candle right there would be your stop if you got in right now. The high is 174.48, and we're trading at 174.16, so it's a $32 risk plus the spread, which is 4 on mine, is $36 risk if you wanted to take that sell. I'm not in it. Pound yen, I'm only looking for sales, even though there's a buy there. And there was your poke down to get back in it. So this thing is probably going to run up for a buy opportunity, but I'm not in it. I'm only looking for sales. The Euro New Zealand is kind of going sideways as well. It is in a buy. You had one opportunity, two opportunities, and you would have gotten on each of them at least half your position taken off and broken off. You'd have got to break even on the second half, but on the second trade you'd still be in it if you took the trade again, which I did miss that one because I've been doing so much stuff. I hadn't really had a chance to be able to look at anything. There's only two that I'm in right now. The pound New Zealand is in a buy, but it's back up into where the sale was. I think it's got to come back up into here, so there could be another push up, even though there's a sale there right now. It's not the greatest. I would think that it's going to push back somewhere up into here and then sell off. but I'm not in that trade. There was a buy there. New Zealand yen, only taking sales on it. That was one that I was in last week, no, Tuesday. No, it was last week. Let me scroll back. No, that wasn't it, because I wouldn't have got it on a news candle. Maybe it wasn't the New Zealand yen. I'll have to check back with that. Anyway, I'm only taking sales on the New Zealand yen. That's all I'm looking for on it. Euro Aussie. Been in this trade. I've got in it on Wednesday. Took half the profit, but I got stopped out, which is right there on that candle. Stopped me out, but I'm back in again with the stop right here underneath that candle low. So I got a very low risk trade in this one. I'm long in the Euro Aussie with the stop right there. So even if I lose right there what I made in it and got stopped up the second half, even though it got stopped out right there, I still made money on it. And of course the first half of the position, so I'll still be up even if I lose on this trade, because it's a low risk trade. Euro CAD has just gone sideways. There was a chance to get in right there and you'd have got your money, half of the position. You would actually still be in this trade, but you would have taken half of the position off, but you'd still be in the second half. You need a push up here so you can move your stop. Finally, the pound Aussie, I'm in it long too. I was in it from over here, got the half the position off, got stopped out on the second half of the position right here on that poke down low because the stop was right there, but I still made money in it from over here. But I've got back into it with the low. The stop of my low is right there on that candle, so it's a low risk trade. So again, even if I get stopped out and don't make any money, I'm still going to make money with the previous trade. So that's why I do low risk trading, swing trading. CAD yen, I'm only looking for sales in it. It had a buy just like the pound yen. There was the poke down buy to get in long, and it's probably going to be heading up. But I'm only looking for shorts. Only looking for short. No, it was the Euro yen, not the New Zealand yen. That's what I was in. Yeah, it was the Euro yen. This is trying to push up to the Euro yen. That would be your stop right now, that candle low. If you got in, the risk would be 169.37. Is that right? 37 is trading at 93, so that's $60 risk. I'm not in it because I missed that poke down right there. But if you did get in it, you would be taking off half your position. You should be out of half the position, and your second half would be at break even right now. But I'm only looking for sales, which is the one I took over here. The Aussie yen, I'm only looking for sales as well, even though it's in a buy. So that's all I'm looking for on those. So this video is being recorded as usual. It'll be posted about 15 or 20 minutes. If you guys have any questions or comments, feel free to go to my video, and under the video there's a comment section. Just ask your question or make a comment in there. And I'm usually pretty quick about getting back to it. I did have a question I had to answer last night. Somebody asked, and this is not the first time this has been asked, about where I suggested on YouTube when these traders that's on there have wins and losses, whether it's by the day, the week, the month, or the year, ever how they do it. And they wanted a little bit better explanation as to what I was talking about on there. And so I went over the same thing. I think most of you know what it is I want you to look for, because you can have somebody who's got X number of wins and they're a lot more than their losses. but you need to know how many pips did they get in total. That way you can divide up the wins, losses, and break-evens into the total number of pips, and it will tell you how many pips on average they got per trade. Now I can have losing trades, and I explained this to them, and I think they understood it, but I can have I think a month ago, I had 7 trades. I had 5 losers. I had 2 winners, but I still wound up with almost 300 pips out of 7 trades, and 5 of them was losers, and that's because I do low risk trades. And then the way I do my trading is I take off half the position. Depending on the currency, they're all different numbers because they all have different ranges. Some is a little bit quicker, others I can let run a little bit more for taking off, move it to break even, and if the trade moves like it's supposed to, then the second half of the position will make more than the first half of the position. As opposed to if I get stopped out, then I get stopped out, but it's with a low risk trade. And so for those of you who didn't know, there's the explanation. That is very deceiving, very, very deceiving, because there's a lot of YouTube traders on there that post their wins and losses. That's not the important thing you want to know. You want to know how many pips did they get in total. So, they may give that to you, they may not. I don't know. If they don't, I'd advise you to leave that channel, because there's no reason for them not to be transparent. So they should be able to give you, and you need to keep up with that. If you're following them, just like if you're following me, keep up with their trades and make sure they don't come back in the next day or two and say, oh yeah, this is how many pips I get of that, and you look and where they said they got out and they go, no, wait a minute, that's not the same thing they did the other day. So that can easily happen. I do have losses. I'm not going to say that I don't. And at times I can have more losses than wins, but you see how my percentage is that, when I do get in the trade, if it works like it's supposed to, which most of the time it does, then it's going to wipe out a bunch of my losing trades, and plus give me profit. So that's why I trade this way. I've been doing this since 2007, trading this way profitably. I've been trading since 2006, but I've been trading profitably until 2007 swing trading. And I started trading in 1998 doing 1 minute, 3 minute, 5 minute, and even 15-minute charts. And I blew 2 separate accounts, so I'll never go back to that again. So I've been able to retire, be consistent in the trading, and it's nice. It's very nice. You can wake up one morning and decide, hey, let's go to such and such place, and nothing holding you back. Because if I want to trade, all I got to do is take my laptop out, as long as I got internet access, and I'm good to go. So that's it for today's video. Remember, I won't have one tomorrow because it's Friday. I don't trade on Fridays. And again, for those of you who don't know why I don't, the big boys take off on Fridays, so that's why the volume is drastically low on Fridays, except for the non-farm payroll report, which will be next Friday. So if the big boys are off, there's no need for me to be there. Just let the average Joe trader beat their head against the wall, so to speak, against one another. And that's Fridays are stop running days also. So the market makers, that's what they'll do, is they'll run the stops that day because it's easy for them to do. So that's why I don't trade. I have a 3-day weekend every weekend. So we'll see you guys on Monday with a new video.